Hi, and welcome to this episode of Financial Planning Innovation. It's my pleasure to have Steve Sless on the line. He's a reverse mortgage expert. Thanks for joining us today.
Hey, Mark. Great to be with you. Thanks for having me.
So, tell me a little bit about your background. I know we met on LinkedIn, and I see you in the media all the time doing interviews of various types. But how did you get into reverse mortgages?
Yeah, so I've been in mortgages for 17 years, hence the hairline. And for the first 5 years, it was purchase, refi. I got in around 2003. So it was good times, to be a mortgage broker at that time. And in 2008, when the economy was heading south and the housing market was as well, there was a young lady in my office and she started originating reverse mortgages. And at the time, I'm in my 20s. Can I really work with seniors? Or seniors going to want to work with me? But I dove in and I became educated in the product and really fell in love with the product and really fell in love even more so with the impact that reverse mortgages can have on the lives of our clients. Fast forward now, been in reverse for about 12, 13 years exclusively. It's all we do here. And we just love it. I love our clients. We love being able to facilitate a more comfortable lifestyle and a more comfortable retirement for our clients. And really haven't looked back since. And in retrospect, getting into reverse was the best career decision that I've ever made.
That's awesome. And I consider there's like three different types of specialists that I run into a lot. Long-term care, annuities, and reverse mortgages kind of have a bad rep, from stuff that's happened in the past, but yet they're so broad and affect so many people, and they're great tools. And so having a specialist like yourself, I think that's so valuable. Tell us a little bit about the reverse mortgage market. What would you say is the biggest misconception out there and how the market's changed when you're looking at it today?
Yeah, I think the biggest misconception is that reverse mortgages are loans of last resort. And even still to this day, even those in the financial planning community feel, they send us referrals almost when it's too late. And so ideally, a reverse mortgage should be a part of the conversation. It should be a part of the overall planning process. And I think we're making some headways. We're making a lot of strides in the reverse mortgage industry to engage more with the long-term care community, engage more with the financial planning community, because those folks need to be educated as well on how many different uses of the reverse mortgage there really are. And in reality, a reverse mortgage is best suited for somebody that doesn't need a reverse mortgage right now. It's a planning tool, right? Seniors have a ton of housing wealth. And one of the last studies I saw, 75% of most homeowners' net worth is tied to their home equity. And so it just makes too much sense. That home equity should be made a part of the overall retirement planning equation. But it starts with financial advisors becoming educated, insurance experts becoming educated. Anybody who's in the arena of working with retirees or soon to be retirees should understand how reverse mortgages truly work. And while they still could be a loan of last resort, ideally they're not. And ideally they're for those who have wealth in their home. They also have other assets and other wealth, but now we marry the both of them together. And by doing so, we're creating a more holistic and well-rounded retirement plan.
Right. And I think you mentioned that they're tools, right? And you want to do them proactively as opposed to as a reactive last resort thing. Talking about the environment today with coronavirus, for example, you've recommended for years that you should have this kind of available to you almost as a line of credit. Can you talk a little bit about how you've recommended clients, use reverse mortgage in that way?
Our industry has been beating the drum of this for well over a decade. And we've been talking about set up a reverse mortgage line of credit to protect and preserve your assets in a bear market. Mm-hmm. But we've been riding this wave in this kind of booming economy for the past decade plus. And a lot of our efforts have gone overlooked, right? Why set up a reverse mortgage? We're earning 6 to 10% in the market right now. Who cares how much equity we have in our house? Because if I invest in the market, that money is going to make more money and so on and so forth. A reverse mortgage is an unbelievable tool to use in a bear market situation because what it can do is it can minimize portfolio withdrawals. And right now, you have folks that are losing money in the market every day. They're concerned, they're panicked. If they had a reverse mortgage set up, they can turn to the reverse mortgage, draw from the equity in the home before taking from their other investment accounts right now. And what that could do is minimize portfolio withdrawal rates. If you have somebody right now that has to take a 4% withdrawal just to live their normal lifestyle, what could happen to that retirement account? What could happen to that portfolio if you, as the advisor, were able to figure out a way to take them from a 4% withdrawal rate to a 3.5% or a 3% or even a 2% withdrawal rate, but inject housing wealth into the equation? Now you're talking from a holistic standpoint. They're using all their assets, not just some, and you're able to, live to see another day, for lack of better terms. You can let the portfolio sit and be able to grow over time instead of having to take withdrawals and diminish those retirement accounts.
Right. And so reverse mortgages, along with some insurance risk management tools, give you more financial flexibility in situations like this. Do you have like a particular client story or a client today that can still utilize this strategy? I know the appraisal values might be fluctuating, and whenever we post this video, who knows where the housing market's going to be. But give us an example of somebody who kind of used that strategy recently with you.
Yeah, I just hung up with one too today, actually. So there's a booming proprietary and jumbo reverse mortgage market right now. There's been a lot of innovation over the years with proprietary and jumbo loans. Folks that have large portions of equity in their home, and these are homes that are $2, $3, even $5 million. So I had a client today that I spoke to. His home is $4 million. He's in Texas, in Austin, actually, $4 million home. He has a $400,000 mortgage right now with a $3,200 mortgage payment. And so what we can do for him is pay off that $400,000 first and foremost. $3,200 in savings every month. On top of that, he's able to access up to $1 million in a reverse mortgage line of credit. Now, he doesn't need $1 million right now. This is a pretty well-to-do guy, very savvy. He's done very well over the years, but he realizes I have a lot of equity in my home and I'm watching my retirement accounts be depleted every day. I want to set up this line of credit. So if and when I want to kind of reposition and start pulling from the equity in my home, instead of taking my retirement withdrawals, he has the availability to do that. He was actually a referral from a financial advisor. And we're seeing more often than not, that's what our clients look like today. They are pretty savvy. They're well off. They've done well. They're smart enough to understand that the equity in their home is a huge asset that, if leveraged correctly, could protect and preserve the other retirement accounts. And so that's one scenario. Another scenario is person came to us free and clear, $300,000 home here in the Baltimore area. They want to set up a line of credit for the same reasons. Now, this isn't a $1 million home or a $4 million home, but this is somebody that has done the right thing their whole life. They've saved, they've paid down their mortgage. They're in a position now where, because of the virus and everything that's going on, they're nervous. And we've been talking to them for the past year about being proactive and setting up a reverse mortgage. This has been the incident, the coronavirus, that has had them say, okay, let's move forward. Let's get this set up, because they want another bucket of money to pull from to add to their other buckets of money that may be depleting right now.
Awesome. I think it's a really innovative strategy. It's not one that a lot of advisors think of. How do we tap into home equity? But this gives you a way to do it. Let's talk about some of the risk factors of the downside. I know a lot of people are probably thinking about, well, you're adding more leverage on your home equity side by taking out the reverse mortgage. What are the protections that somebody has that does this? And what are the things that they should be thinking about just to make sure that they don't fall into a situation where they lose their home or they get kicked out of their home or something like that?
Sure. So another misconception is that somehow you give up ownership of the home. So that's not true. With a reverse mortgage, it's just a mortgage, right? So you still own the home. You have three responsibilities. Responsibility number one, pay your taxes. Number two, pay your homeowner's insurance. And number three, general upkeep and maintenance of the home. As long as you meet those three key responsibilities, you cannot be foreclosed on. You cannot lose your home, right? And so even if the value of your home at the time of sale is more than the sale price of the home, these are all non-recourse loans, which means that neither you or your heirs can be held responsible for any overage. These are all, most of them are FHA insured reverse mortgages. And so if you take out a reverse mortgage, you're in your home for the next 30, 35 years, you wind up in a position where, let's say you owe $400,000 on a home that's only worth $300,000. That $100,000 gap is covered, meaning it's, again, non-recourse. So your heirs would sell the home, they would walk away, they wouldn't get any funds from the home, but they also wouldn't be responsible to come out of pocket with those $100,000.
Right.
They're all non-recourse loans, and that's critical because it allows the homeowner peace of mind to know that they can access the reverse mortgage, they can use the equity in their home. Hopefully, when they pass away or they move, there'll be some equity in the house to pass on to the future generations. But if not, they're not leaving a debt to their heirs or their estate.
Right. And I think you mentioned the important things, and this is probably where you hear bad stories about reverse mortgages. Make sure you pay your property taxes, your insurance, and you upkeep the home. Those are the most critical things. And then, of course, just be aware of what your equity value is, that you may be giving up some of that equity value that your kids would have gotten had you had more equity value in the home. But as long as you're okay with that, it gives you more financial flexibility as a tool. So I think it's really.
And Mark, you can also make payments on the reverse mortgage, right? And so a lot of our savvier clients are saying, well, yeah, I'm going to access the wealth in my home. When it works for me, I'll make a payment. Some even make an interest-only payment. And so if you're worried about the balance of your loan increasing, we can, with a pretty simple calculation, tell you, here's how much you would have to pay per month to not have your balance increase. If you can make payments, great. If not, you don't have to. The key is flexibility. So the ball's in their court, and no other mortgage provides the amount of flexibility that a reverse mortgage provides, and that you can make payments if and when it works for you. If not, you choose not to make payments and you're deferring payback until you leave the home. But you can always make monthly payments.
Very cool. Well, I appreciate you being on the show today. I know we're going to have future episodes because this is such a broad topic that affects so many people. But thanks for sharing your expertise.
Absolutely. Thanks for having me. Great to be here.